Magandang hapon, Tess.
Hi, Paulo.
W-
Magandang
w-
hapon sa'yo. Good
yeah,
afternoon.
now we're here for another episode, episode 8 of Pinoy Homes Canada.
Already?
8
Wow.
episodes, yeah. So it's been a couple of months right now that we started, and our topic for today is the massive 50 basis point rate cut that the Bank of Canada has announced last week.
More
Um,
changes.
More changes. I think, yeah, like for the last few weeks now, it's all changes, either mortgage rule changes, rate cuts. So definitely,
Amortization.
I know,
Amortization, down payments,
yeah, yeah. So
everything about mortgage and real estate
for
and
sure.
immigration. Yeah,
So it's definitely stuff that we need to be covering so that our listeners can be up to date.
that's right.
So so 50 basis point rate cut by the Bank of Canada. So that matches the because the US did a 50 basis point rate cut after not cutting. So for us, this is the fourth consecutive rate cut. So now the total is minus 1.25. So one
Two
and a
five.
quarter in the span of, let's say, was it four
Four
4 months,
months.
5 months?
Yeah,
Yeah,
4 to 5 months. Yeah, and this
four
is
to
the
five
biggest
months.
one.
This is the biggest one. So it was
Yeah,
25, 25, 25, then 50.
and 50.
So yeah, so we're definitely trending the right direction to help stimulate the economy. Then there's one more this end of the year on December 11th. We still have one more rate announcement that a lot of experts are saying that could possibly be another 50 point basis point rate cut. What do you think about that?
I think it's another half a point.
Half a point, yeah. At
But I'm, but
least.
I'm, I'm biased because I'm a variable rate holder. I have to be honest.
Yeah.
Yeah, but either way, any
Mhm.
like 25 or 25 beeps or 50 beeps, either
It,
way is good.
it would be at least 25. It would be at least
Yeah.
25. So our overnight rate is going to be at 3.5% at that point, right? So by the end of
Yeah.
the year. So while we're on that topic, I just want to remind everybody, because now that we're seeing 3.75, 3.75 everywhere on the news, social
Yeah.
media,
It's
again,
confusing.
yeah, what that means is because every single time I can be talking to the same client, they'll be like, okay, so does that mean my rate is going to be 3.75? So just to clarify, 3.75 is the Bank of Canada overnight rate, and that directly affects the prime rate. But the prime rate is still at 5.95.
That's right.
And so 3.75, but prime rate is 5.95. And that's what affects your mortgages directly if you have a variable rate or a home equity line of credit. Okay. So home equity line is typically 50 basis points above that 5.95. And then for the variable rate holders, you're getting a discount. As of right now, it's about a point 0.5 or around 1%. 0.5 if it's an uninsured mortgage, and if it's insured by CMHC, you're getting about the minus 1. So those variable rates are about around 5%, just a bit under 5.
Mhm. Ang tanong ko,
Mhm.
hindi ba, 'di ba, magfa-follow suit you're only gonna get that 50 beeps discount kung magpa-follow suit yung mga lenders. Some of them hasn't they haven't really followed suit yet. Because that's just that's the overnight lending rate of
It
Bank of Canada to the lenders, not the lenders to the consumers.
Mhm. So what happens in that point is, so the variable, the prime rate, typically if it's the prime rate is 5.95 now, like let's say said by Bank of Canada, that most of the time translate directly to the five banks prime rate as well.
Mhm.
So if you look it up, all of their prime rate is 5.95. Although I think TD is one of the banks that don't follow it directly. They're slightly higher, if I'm not mistaken. That's
Mhm.
where they have more control, is how they translate it to consumers by that discount that they give.
So it's important to check with their banks.
So
if
for sure.
if
Mm-hmm.
yeah, if it affected their mortgage rates, because
Mm-hmm.
sometimes it doesn't, so it's, di ba, makakakuha naman sila ng mortgage statements, right? They can request for it if they
Mm-hmm.
wanted to, or call customer service
Yeah.
of their banks
So
to find
typically
out.
when there's a rate drop, let's say this month, it's by next month that you're seeing that reflected on your mortgage. But the one thing that I'm hearing now though is like there were variable rates that were going up, but now that uh, the prime rate has been going down, that some are not seeing that decrease, and it's just dependent on the with the bank you're with, because some of them, when it was going up, there it hit a trigger rate. So
Mm-hmm.
once it hit that trigger rate and then you're on negative amortization, you're kind of playing catch up, right? So there might be situations where they're not dropping your payment because you're trying to catch up to do principal payments.
What does that mean, Pao? So does that mean it will offset what, for example, if you went to negative
Amortization.
amortization,
Yeah,
it
because
will,
when you have had negative amortization, now you're playing catch up, right? So now your payment is staying the same because now you're paying more principal payments because now you owe more. Like your mortgage went up, right? So it has to play some catch up. So some variable rates are not decreasing.
meaning pay off that part where the rates went up in order to offset that, I guess, money owed to the bank, because when you had a static payments,
Because
it's always going to be the same.
it's either that if or some people are being asked to pay lump sum payments,
Okay.
right? So yeah, the basic answer is it depends on your bank. So I don't want to go into it because each bank kind of handles it differently.
Okay.
Because there are banks that some of them have been static payment variable rate mortgages that their payment doesn't go up, their amortization has gone up. But then you have ones like Scotia that every time the prime rate goes up, their
Payments go up.
variable goes up, their payment go up, and then if it goes down, it goes down. So it uh, it keeps on top of your payments that you're not going to negative amortization.
Okay.
Okay. So,
Yeah.
but yeah, so I just wanted to clarify that in regards to the overnight rate that you're seeing, the 3.75 is not directly what you get as a rate. Okay. So, and then the other part is, so if you are a fixed rate holder, that's not going to affect you because you are fixed and you're on a contract. But the people that are looking to take fixed, what happens in your situation is, though that decrease in the overnight rate can indirectly affect the bond market. So in the upcoming weeks and months, that could adjust as well, but it's not directly tied. The fixed rate market is not directly tied to that overnight rate. Okay. Okay. So
Hey,
now, what
big question.
the
The
big
big question.
question now is:
Should you go?
do you go fixed or variable? Right. To start off, I just want to say that mortgages, it's not one size fits all, right? So it's always depends on your own financial situation. So make sure to talk to your mortgage professional, your mortgage broker, your bank, your bank advisor about your specific situation. But generally, right now, with the overnight rate being 3.9 or 3.75, your
75.
variable is hovering around the 4.9 to 5.4, 5.5 mark as of today. It's still end of October 2024.
That's a huge reduction from 7%
Yeah, yeah.
just 2 years ago, right?
Hmm.
Yeah.
Like maybe like last year, right? At the top of the market, right?
Yeah.
Uh,
When
uh,
it started going up.
mhm. The fixed rates are in the 4% range, depending on, again, insured or uninsured in the term that you're taking. So lots of mortgage professionals now, like on social media, like everywhere, you're hearing variable rate. Variable rate is the way to go because you don't want to lock in. Even the 3-year rate might not be the best idea at this time, because why lock in at, like, say, 4.5 when rates are going to be in the 3%, by the summertime. Well, again, that's per individual's
Situational.
risk tolerance, right?
Right.
Because as of right now, if you're doing a variable rate, you're still taking on a higher rate initially than if you were just to take fixed, because you're still
What
looking
do you mean
at
by that?
if you were to lock into a variable right now, you're still looking at maybe high fours, where
Mm-hmm.
you can be getting low fours or 4.5 if you just take fixed now. It's the anticipation that the
It's
variable
gonna go
rates would
down.
be down to, the 3% mark by the summertime next year.
Or
So to
even
some
better, 2.5%.
mhm. Well, the 2.5% I think that being talked around is the overnight rate. So your variable
Yes,
rate will be in the 3% range, right?
that's right. That's right.
Mhm. I do advise the variable rate if you do have the risk tolerance for it, and then if you can afford the higher payments as of right now. And then keep in mind that variable rates are convertible. In most banks, there's no fee to convert it. And what that means is you take the variable right now, it's higher, it's going to be trending down, and then fixed rates are going to come down along with that. And then when you're seeing fixed rates in the 3% mark, that's when I would lock in, because you can convert it from variable to fixed at that point
Without penalty.
without a penalty. If you're at least taking like if you have a 5-year variable, and then it's you still have about 4.5 left, you have to take the same amount of term on the fixed to be able to convert it without the penalty.
Mhm. Okay. So you carry
Okay.
on with the terms. Yeah.
hmm so
You're
yeah,
just
so
locking it in.
that's what I would say. But so for the people, there's a lot of mortgages that are still maturing. I think 2025, I think they were saying about $352 billion worth of mortgages are coming up in
Oof.
2025. So
Yeah.
for a lot of people, there's a lot of renewals coming up. You can easily, so to clarify, in Canada, when you are taking, or sorry, when you have a mortgage maturing, you pretty much just sign on the dotted line. It's not a new application. You've already been approved for it originally. So you just sign, you pick your term, fixed versus variable, how long you're going to take it, and then you just sign, right? So you do have that option to just go variable right away. The one thing that I wanted to point out there is, to some people, if you're buying right now or doing a refinance, you need to qualify at that point. And qualification is based on what rate you have, because you still have to qualify on
Income.
the contract rate plus
Yeah.
2% in most situations. So that means that the lower the rate, the higher amount that you can qualify for a mortgage. So right now, the variable rate being higher than the current fixed rates, that's the reason why some people are still taking fixed rates, because it's for qualification purposes. And on what's attractive right now is you're looking probably a 3-year or a 5-year fixed to be able to qualify for the most that you can if you're doing a purchase or a refinance. Okay. But just to sum that up, my recommendation for people that has that risk tolerance, and if you're financially sound, is do the variable, write it out till about the summertime, and then you can convert it to a lower fixed, and then at least that gets you, I think, overall, though, don't be greedy. I think if you see rates in fixed rates in the 3% range, I think that would be
You're
ideal.
you're in good hands. Yeah.
Yeah, because the problem is you're not gonna know the very bottom, right? So that would be my advice, is just do if you can write off the variable till about next summer, and then you're seeing a rate in the 3% range, that's the time to go fixed. But for people
Exactly.
that
We
are
don't.
Mhm.
I was gonna say
Sorry.
we don't have a crystal ball. We don't know what's gonna
Mhm.
happen in the future. You should just take it as grain of salt. Whatever you have in front of you, just look at your financial situation and your risk tolerance, and go from there. See
Mhm,
what you
mhm.
can. Of course, speak to mortgage professional and see what they suggest, and look at your situation, and make a decision.
Yeah, so that's kind of my take on where the rates are in our 50 basis point rate cut. And it remains to be seen what happens by the end of the year, but at least expect another 25 basis points to like 50 basis points on December 11th, right?
So really, Pao, right now, between variable and fixed rate, the numbers are very close. So that's why it's so tough.
Mhm.
to decide which one is better. Some people who want security with no changes and stuff like that, no
Mhm.
market fluctuations.
Mhm.
They're better off going for fixed, right? Because right now it's still in a 4 point something percent, right? Is it?
The 4% range,
That's very
like
low.
or
That's very
low fours possibly.
exactly, yeah. Because the thing with variable rates is that you have to start looking on what's out in the market right now. I mean, there's like so many news buzzing around that it's gonna keep going down all the way to the 2.5% overnight rate, and
Mhm.
that's
Mhm.
what you have to consider in making that decision. It's
So
tough.
yeah, so just to put that in perspective, like the overnight rate is right now is 3.75. So they're talking about another 1% to 1.25 drop on that, right?
Mhm, mhm.
So yeah, so that definitely will we would end
We
up
shall,
with rates in the 3% range.
which is
Like
pretty
that's the
low.
one that the consumers will be able to see that for their mortgages is in the 3%
Mhm.
range. So, but
I wanted to ask you.
okay.
I wanted to ask you something. If the rate goes down again, like if right now we're at 3.75 Bank of Canada rate, if it goes down for another 25 bips, would you consider buying a property considering you're financially able to and you can take the risk tolerance and stuff like that? Would you buy now? Do you think it would be the best time to buy?
Well, I think definitely in the next, now to like the next 6 months would be ideal time to buy, because anytime that there is a buying opportunity, so a lot of our sales numbers have been down, like
Mm-hmm.
overall. There's more inventory in the market. I would rather buy in this type of market than when your rates are really low and then you have multiple offer scenarios, which we all lived in 2021, early 2022, right?
Yeah, 21,
S-
yeah.
yeah, so yeah, definitely. But again, it, like you said, it depends. If you're financially ready and there's opportunity right now and you qualify, I always say that's the right time to buy.
That is the right
The,
time to buy if you're financially stable. That's really the key word there.
because you can't.
Anytime.
Mhm.
Yeah.
And the problem too is there's other factors you can't control, right? You can't control where, if you get laid off from your job, if mortgage rule changes, like just suddenly change. There's going to be an election year next year. That means there could be a possible transfer of power. It's a new administration. Rules can change again, so that could work in your favor or not in your favor. So
Mm-hmm.
what is what is right now. So if you're financially ready right now, you're able to buy and you can afford it, don't worry about everything else around that, right? And in any case, if you're especially if you're renting, so we're not even talking about people that are possibly moving up or moving down.
Mm-hmm.
Like if you're renting, definitely if you have an opportunity to buy right now, because now it's from 100%, you're just paying somebody's mortgage and somebody else's property. If you can get into the market now and that these properties are quote unquote on a discount, then it's the time to buy, right?
Mm-hmm. That's right.
Mhm.
I agree. Yeah.
There's arguments there. Then I don't know that people comment, well, if it because of all of this stuff happening, the market's going to go down, but you can't anticipate that. You can't control that. And you kind of, you just know about your own situation, right? So if it's an opportunity to buy, then yeah, no, if you love the house and you're going to stay there like in the next 3 to 5 years at least, then why does it matter what happens in the next year?
Yeah. Yeah. But you're gonna see more like a high demand in
Mhm.
housing once the rates keeps going down. We've
Well,
seen it in the last 2 years.
mhm.
That's the way to go. So
Well, yeah,
that's
I
another
think
thing.
I think
That's
what's
another thing they have to consider.
mhm. And what's happening now is it's just psychology as well, right? For like human nature with the rates dropping. I think the first three rate cuts that happened, there wasn't a lot of activity, but now
It's
with
not
this
really
50
substantial.
basis point rate cut, I'm seeing more clients start talking to me now about getting a pre-approval.
Hmm.
So
Which is a
regardless
smart
of
move.
mhm,
Yeah.
regardless of what happens in the market, people are starting to be interested. So at some point, with all of the mortgage rule changes, then like regardless of what happens in the market, there's a lot more people going back into the market to buy now, so which could take up inventory, right?
Mm-hmm.
Mhm.
That's right.
So so yeah, that kind of just an overview of where our rates are at. I think I want to move along with a bit of an update now. I was mentioning inventory, like I think I'm hearing a lot on the news right now with the condo market, right? So I kind of wanted you to touch on like what is happening in the Toronto market right now, Tess.
Well, basically in GTA, Greater Toronto area, and I think surrounding cities as well, condos condo sales are really, kind of stagnant right now. It's been like that for the last few months. So it's still for condo market, it's still a buyer's market. So there's not a lot of movement. A lot of clients or sellers are still in that COVID mindset that their numbers should be higher. They should sell it higher. When the price is higher or not at a market value, of course, it's not gonna move, right? So it's important to price it right. I see it's moving a little bit more now, but again, the inventory is still very high. We have like 7 to 8 months worth of inventory currently.
Mhm,
In Toronto alone, I checked last night. There are 6,920 condo units in that's Toronto, not even GTA, just Toronto.
mhm,
In Durham, there are 387 condo units
mhm.
since I've checked last night. That's a lot. And then in Durham, I didn't really explore a lot in Toronto, but in Durham, I found condos that are as low as less than 375,000. In case some first-time home buyers they are interested, you can start looking in Oshawa.
Mhm, mhm.
There's a lot of I mean, for 2 bedrooms, you can probably just 2 bedrooms, 2+1, probably less than 500. There are a lot
Wow.
of deals out there.
Mhm.
It's the first thing really that you have to do, I would say, in order to have a smooth way
Transit.
to in getting into the market is get a pre-approval. Because once you have that number in place, then you know exactly what to look for, and you know where you can look for that price range, right? So importante yun.
or or
And
we haven't seen those prices in a while, right? Like
yeah,
in terms of
exactly.
that type of property, like in the GTA overall,
Unheard
like
of.
to see,
It's
yeah,
unheard
unheard
of.
of. Like anything under 500. What is actually the square footage? Like, are you seeing at least 600 square feet to
Yes, yeah,
higher?
yeah.
Yeah, okay. So
600,
that's the
yeah.
thing because a
Not
lot of
bad.
before, if you're seeing anything under 500, you're looking at probably like 400 square feet. So now to see some inventory that are like 600, and I actually look quickly too, even in downtown core, that you're finding ones that are 1+1, like, one bedroom plus den that are about
Mhm.
listed for 499 in Toronto, which I'm like, wow, maybe would myself would reconsider buying downtown, because downtown's always going to be downtown Toronto, right? As much as all of these things happening, like I actually recently I was looking at, oh, if I wanted to get a hotel downtown, it's crazy the prices of hotel rooms or even Airbnb downtown,
Yeah,
right?
downtown probably 400 to 400 per
About
night.
300 is probably average, 3 to 400.
Yeah,
You're right. Yeah. So there's
yeah.
always going to be that need
Market
to
for
go
it.
the
Yeah,
market, yeah, for downtown Toronto.
yeah.
So
499 you said? That's very low for
yeah,
one bed, one
I
plus one.
saw I
Downtown
saw
Toronto? Yeah.
yeah, I don't know the exact area, so don't but I don't know offhand if it's the best areas, but I was seeing it like literally last night because I was just curious. It could also be clickbait, you never know, some people might be
You're
listing
right.
for 499 and then won't sell for like at least 600, right? So
Right. Yeah, it
but
could be for
definitely
bidding. But
but
there are a lot
definitely
of deals out there. There are a lot
yeah.
of deals.
Yeah, because you mentioned 7 to 8 months worth of inventory. That's a lot,
Buyer's
right?
market. Yeah.
Hmm.
That's
That
still we're
makes it.
still so for condos it's a buyer's market, but overall we are in a balanced market.
Hmm. Yeah,
So
and
um
are like detaches and like semis going fat? Like what? I don't think I asked that for you to prepare, but if you have that approximate days on market on those
I think I've talked about that one last time, but let me
last
see.
time.
For the detached, there's an increase of sales in this is in GTA, okay? 10.5% in detached. Semi-detached up 12.6.
Mhm.
townhouse 14.3, and condo 0.8%. So they all went up in sales
Mhm.
compared last year.
And just to clarify on sales, we're talking about sales numbers,
Sold.
right? Like
Yeah,
sold,
yeah,
like
sold.
that,
Yeah.
like how many people are buying and selling. Yeah.
Yes,
Okay.
correct. But then average price, they're all down. All of those ones, all those home types were down for in terms of average price. So
Mhm.
there's movement, but
It's still slower. It's still slower
still flat.
overall.
Yeah,
Overall,
yeah.
yeah.
It's but I think there's gonna be more movement as we go along,
Mhm.
especially towards the end of the year. Yeah,
Mhm. Okay.
and
And was there any other updates, Tess, in regards to the condo market there?
yeah, for the condo development in the city of Toronto, there's a huge drop of 33% in the first half of 2024. I think everybody saw that coming because there was no movement in condos alone for resale. How much more for the pre-constructions, right?
Mhm.
Um, there is a big boom in suburban areas, and those areas, examples of suburban areas around Toronto where condominium construction increased include the Pickering. That's in the east side. For those don't know, Pickering is on the east side. It's part of Durham region. Oakville, it's one of the most expensive cities in GTA. It's in Halton region. Mississauga is in Peel region, and Vaughan. There's a big uptick on the construction in those areas. So outside of Toronto, as you can see.
Mhm.
So we're seeing higher urban prices and interest rates discourage investors' activity, impacting retail rental supply potential. So a lot of investors are pulling back their funds because of the prices, right?
Mhm.
There's also sales and financing challenges. New condo sales fell 59%. That's huge. So it makes it
Mhm.
harder for developers to secure funding. In fact, a lot of developers right now are giving away a lot of incentives
Mhm.
just to attract more buyers, right? Or investors.
Is this general different types of properties? Or are we talking specifically condo
Just
market?
just condos, just
Condos, yeah.
condos. Yeah.
Mhm.
Yeah, just condos. Because usually, you know how the developers require 70% pre-sale
Pre-sale, yeah.
threshold? Yeah.
Mhm.
And
And they're
they
not
didn't meet
getting
that
that.
one.
Yeah, they're
No,
not
not
getting
at
that.
all. Even though they're giving away pretty much throwing everything. But they
Mhm.
have to do better than that, obviously, in order to get more people to buy condos.
Well, I think the biggest problem is the price per square feet has gotten out of hand in Toronto the last few years, right? Like you're buying condos for like 13, 1400 per square feet. And then
So high.
yeah, and then the disconnect too, that if you're buying pre-sale, you're buying at 1400 per square feet or 1300 per square feet, but then if you buy just resale, you're still looking 950, maybe 1000 per square
And you
feet.
can move
So
in. You can move in
mhm,
a certain time. There is certainty,
mhm.
right? I'm not discouraging people to not buy pre-construction, but as you can see, I'm not really a pre-con. Yeah, I don't really
The problem is
recommend it
where what the price point was. I think it's a big gamble, and also there's
right
a lot
now.
of
Right now, yeah.
there's a lot of or even the last couple of years, there's a lot of unknown. Like you don't know when that mortgage is going to come up. You don't know if rates are going to be really high at that point. You don't know if vacancy is going to be high. There's a lot of unknowns, so it's a bit of a gamble. But the problem is the 10 years ago, it wasn't much of a gamble because it just kept going up
Mm-hmm.
until today. Right?
Yeah,
so
yeah.
so before, people were making money and they're just, everybody's just like, oh, pre-construction, I've made 80,000,
Just
and
it.
then and then
Exactly.
they don't even close some of those, like, you can do assignments before, right?
Yeah, exactly.
Hmm.
Yeah, exactly. That's it. That's why. So one of the reasons kaya yung mga developers nagde-develop sila sa labas ng Toronto is because of lower land cost. You know
Hmm.
how expensive it is to buy a land in Toronto to build those kind of to develop those kinds of constructions, right?
Hmm.
Kaya lumalabas sila sa Toronto, pupunta sila sa surrounding areas.
Hmm.
So that's another thing that they could do in order to build more houses.
Hmm.
Um, yeah, in order to combat the housing crisis. In this opportunity, is this an opportunity to get into the market? Well, again, we talked about this earlier. It all depends on your financial situation, risk tolerance. You have to check on what's happening, mortgage rate forecast, and housing market predictions for the coming years. But for now, I think buyers are heading in the right direction. Like, there's a lot of great news. The thing is, there's just so many news. There's so many news to keep up with,
Mhm.
with all the changes. So yeah, make sure you ask your mortgage professionals on this one
Mhm.
to make sure kind of know where to what to do, and you're up to date with all the changes that's happening.
Well, yeah, I think overall there's a lot of things to kind of watch out for, because what's happening with the economy, with the market, but also that brings opportunity, right? So there's also opportunities
That's right.
there that you can take advantage of. But it, again, like you mentioned, depends on your financial situation, your risk tolerance, and everything else, right? So,
Mm-hmm.
but yeah.
That's
And
right.
I think thanks for that update, Tess, about the condo market and how it's going, because I keep watching. I watch a lot of like, let's say, YouTube or social media, and that all I see right now is the condo market, and is it the end of the condo market and that type of thing, which I know there's a lot of kind of doom and gloom kind of news out there, but also that comes with opportunity, right?
Right. It's really, that's how the market is, right, in real estate. So I think I could say that within our market right now, condo is down, it's flat. But I think we're gonna see more uptick in the next few months when the rate goes down in the next few months. I think December 11th is the next one.
Hmm.
I'm
And that's
because
what
I'm
I've
seeing
actually
I'm seeing
been.
more buyers right now. I'm seeing more
Mhm.
buyers.
Yeah,
So many
so
inquiries.
my client, actually, I had this question yesterday. It's like, do you see that it's a good time to buy? And my answer to them is, with all of the changes that are coming up, with the rates being anticipated to keep going down, I think we are setting up for a busy spring summer market. So I think there's more, if you can find an opportunity this winter where it's still somewhat slow and there's more inventory and you're ready, I think it's a great time to try to get into real estate.
Another thing for, yes, that's right, Pao. Another thing for homeowners or home buyers, first time home buyers specifically, to consider is, I know some of you want to live in Toronto, but it costs more money to live in Toronto. If you're willing to sacrifice and willing to go further, like 15, 20, 30 minutes away,
Hmm.
you can afford more
More.
for what you are pre-approved for, right? So just as
For,
something to consider, have open mind, just see what's out there and then make a decision. Don't be close-minded and just like, I just want to be in Toronto. There's a lot of ways to get to Toronto. There's a GO train, there's TTC. Well, I guess TTC starts in Kennedy now because they got rid of the LRT. But there are a lot of ways to
hmm.
afford a home based on or within your means, right? So,
Hmm.
Pao, last week I attended an event where where the chief economist, Dr. Sherry Cooper of Dominion Bank, I believe, um, where she spoke at the event. Everybody in, I guess, I'm sure, um, in the mortgage industry knows her.
Hmm.
You know her, right?
Yeah.
So basically, I'm just gonna summarize what she talked about in
Hmm.
in the event.
Okay.
I'm just gonna read it through here. She said that the growth in the economy is likely to pick up as we move forward into 2025 and 2026. So that's good, right? The pickup in economic activity presupposes the interest rates will fall further. So we talked about that earlier. So there's going to be more reductions in interest rates. Dr. Cooper expects a significant decline in interest rates over the next 6 months. So it's going to be a very busy spring market. While employment growth averaged 26K per month, labor force growth averaged 125,000 per month. Newcomers and youth are the hardest hit. We've seen this in the news as well, that a lot of um, first time home buyers, like young ones, they're already thinking, the new generations per se. are already thinking there's no way they can afford a house. For them, it's a
Mhm.
luxury. They're probably going to stay at their parents unless they can borrow from mom and dad bank, stuff like that, right? So
Mhm.
unfortunately, hopefully that will change. Property taxes are tax deductible up to a certain limit. I'm not going to get into that. The September unemployment rate fell slightly to 6.5%, marking its first decline this year. So
Mhm.
that's the unemployment rate. You talked about that earlier as well. Wage inflation fell to 4.6% in September. That's the wage inflation. So it went down to 4.6. Job vacancies have decreased. That's why we have so many unemployed people. Rising unemployment leads to mortgage arrears, of course, because they can't afford it. Job vacancies have plunged, contributing to lower inflation. Inflation has clear downward momentum, falling to 1.6% in September. That's where we are at now. The Bank of Canada cuts the overnight rate by 50 beeps to 3.75%, right? The prime rate is now 5.95%.
Mhm.
Monetary policy remains restrictive, with the overnight rate still 145 beeps above the current core CPI inflation rate. So the average real rate over the past 30 years is just 60 beeps. Did you get that one?
Which one is that? What is that referring to?
The monetary policy, she's saying, is remains restrictive, with the overnight rate is still 145 beeps above the current core CPI inflation rate.
Oh, okay.
Because the average, and because she said that usually the average real rate over the past 30 years is usually just 60 beeps. So we're still over that. So meaning,
Mhm.
I think she's saying is that there's still room for reduction.
Production.
So
Okay.
yeah, so the overnight rate is likely headed to 2.5. So right now we're 3.75. She
Mhm.
said the overnight rate is likely headed to
By
2.5%
spring.
by
Wow.
spring.
So that's
That's
like
what
6 months. Yeah. So
that's yeah,
basically,
that's
just to clarify what that means is, again, I think I mentioned that earlier. It's 3.75 right now, and it's headed to possibly 2.5 by spring. So that's another 1.25% reduction in overnight
right.
rate. Okay.
Yeah, when she mentioned that, well, like a mortgage mortgage professionals and realtors were screaming were screaming in the room. They're like, "Hey!" Because I guess it's a great news. So
Hmm.
let's see here. Further declines are expected, taking the policy rate to 2.5 by spring 2025. One more decision date is scheduled for this year on December 11th. That's next month. The overnight rate is projected to reach 2.5% by spring, again above the pre-COVID rate of 1.75%. So we're still higher compared to the COVID rate
Hmm.
of 1.75. More than 70% of Canadian mortgages will come up for the renewal. More than 70%
Hmm.
will come up for the renewal between 2024 and 2026.
Hmm.
September home sale rose moderately but remain well below the 10-year monthly average. However, new listings surged in September.
Hmm.
Buyer market to balance market. The sales to new listings ratio fell in September. So there are more listings than sales, is what she's saying. Home prices remained flat again in September. 90% of new mortgage borrowing is in short term, that's between 1 to 3 years, and it's fixed rate loans. Each
Okay.
Bank of Canada rate cut adds fuel to the real estate demand. Yeah, we know that, right?
Hmm.
When there is a rate reduction, the home prices starts we see the home pricing starts to go up. There is no way to meet housing demand. It would take 500,000 housing completions to address the surge in demand, which we have never seen in a single year. So did you see that? We need 500,000 housing completions to address the
Annually.
surge annually.
Annually.
That's a
Yeah.
lot. I don't know how we're going to do that.
Hmm.
We
Yeah,
haven't
there's
yeah, that's
there's
why there's so many changes.
definitely, yeah, there's the demand is there. The only reason that, I don't know if everybody remembers, like, we've been in this industry, both you and I, for quite some time, and we seen that, like, like, suddenly the demand dropped off because interest rates were going up, and it's because people were not qualifying based on those rates, but the people are still there. And then once
Mhm.
those rates come up, they're going to want to come back into the market, right? And especially with all of these new government incentives that are coming in or for qualifying. So yeah, so definitely I would project as well that in the next spring summer is definitely going to be a busier market
Mm-hmm.
for for the real estate market in Canada.
Yeah, I just hope that the first time home buyers or those who are interested or planning to buy very soon within the 3 to 6 months doesn't wait in getting a pre-approval, because it's going to get busy. It's going to get busier. They
Hmm.
should like be proactive and get it done now. If you don't plan in buying later on, you decided to, like, okay, it's too expensive for me, that's okay. At least you have 120 days to lock that interest rate.
Hmm.
Am I right, Pao?
Hmm.
But at least try to take the first step in finding how much you can afford before you even start looking.
And I think if you're in the market for to buy, that's definitely a good idea. And if you don't find something, I don't think also that there's this rush, and that's not what we're saying is rush into the market, but get kind of equipped, get everything that you need in line, get a pre-approval. If you find something in those next few months, then yeah, that's great. But we are like kind of just to put, we're just putting it out there that with all of this things happening, it's kind of like a formula for a busier market, right? Come spring and
Mm-hmm.
summer.
That's right.
Mhm.
Yeah.
So, well, thank you for that update,
Sound great.
Tess. I think that ends our episode for today.
My pleasure.
And again, where can they find us, Tess?
I don't know where. YouTube. All
where
the
we're y-
social media platforms: YouTube, TikTok, Instagram, Facebook.
and
Don't
it's all the
forget.
same handle at Pinoy Homes Canada. And
That's right.
again, Tess, thank you. And until the next episode.
Until then, see ya.